Hello, everybody, and welcome back to the Dash Trader Newsroom. GOOG and Tesla slide as big tech earnings are not as good as expected. Market rebound a little bit today, but let's jump right in. My name is Michael DeGioia, and I'm joined by my co-host, Jill Molandrino. Jill, how are you?
Good, doing well, thanks.
We're right here in the middle of summer, and certainly not the boring doldrums that anybody expected. Yesterday we had a massive market sell-off. That was yesterday, which was Wednesday, and then we've rebounded today, Thursday, as GOOG and Tesla both disappointed the street in their own respective ways. Last week was one of the worst weeks in recent memory. And the question is what was the catalyst? Was it the kind of lackluster tech earnings? Was it just profit taking? Was it the IT crash that happened on Friday? We're going to talk a little bit more about that as things go on. Or was it the political worries? Or was it all three? It was just the trifecta of all kinds of stuff going on. What are your thoughts, Joe?
Yeah, well, I mean, I feel like you could probably pack a generation's worth of news in the past 2 weeks. I agree with you there. First, we'll start with what happened with Google and Tesla, and one of the narratives that not only you and I've been covering, but financial media in general, is concentration risk associated with the Mag 7 or whatever acronyms being associated with them now. And I think because so much forward anticipation was priced into these stocks, if they weren't handily beating and raising guidance to the levels that the street was expecting, it not only does it impact those stocks, but it's going to move over to the other areas as well, where there's such concentration within those names that make up the S&P 500, NASDAQ 100, of course. So I think that's part of it. Also, the trade could have taken place even before earnings, where portfolio managers have made money in some of these names and they moved into other areas that are more cyclically exposed to the economy, right? Because our numbers are still coming in pretty decent. We saw the GDP print, employment numbers were good. It feels like a lot of this happened after the CPI print last week. But I think the rotation, really a big part of it is because the expectations were so high for these stocks. I also feel the market is trying to figure out what policy is going to look like with the presumptive nominee Harris. I also think with Trump, where some of the uncertainty lies is I don't think his administration is going to mimic what his first one looked like. Feels as if there's going to be some policy shifts there, and the market's still trying to anticipate what those are going to be.
Yeah.
And then, the IT crash with CrowdStrike impacting, Microsoft operating systems. I think it was a big eye opener to understand just how connected we are, and that one patch that was put through, or I don't know the technical terminology as well, shows the vulnerability of being an interconnected world, right? So thankfully it wasn't a cyber breach. It was more of an update being put through that I guess wasn't tested as well, or did it go through whatever protocol? But I think that really highlights how companies think about their cyber platforms and preparedness, not only mitigating vulnerabilities but responding to any vulnerabilities that come to pass.
It's very good. I mean, we definitely had a trifecta of a storm of news in the last couple of weeks, and it's a lot for the market to digest. I just wanted to let's just hone in and focus on the first item. Obviously we had you and I have spoken about the Trump and Biden debate, and then shortly thereafter we get the Trump assassination attempt. Then we have Biden being pressured to drop off the ticket, and now potentially Kamala is the nominee. Is this the start of the election volatility that we had been talking about? Or is this like above and beyond, in your opinion, the normal election? I mean, this is not a normal election. Everybody always says this time's different, and I always hesitate to say that, but this one certainly does feel different.
It's interesting. I held a cyber panel yesterday on the show at MarketSite, and all of my panelists were from outside the US. One from Germany, one from Estonia, one from Norway, and I forget the other one. And a lot of times they'd like to get our perspective in terms of how Americans, we perceive it. And my first response was, eliminating all the noise, because I just think collectively we're fed up with that, and we feel like there's lack of leadership. And if Biden has to drop out, who's running the country now? So those are like, we're exhausted from that part of the news cycle.
Mhm.
But as market participants and as an American citizen, you want to understand what policy is going to look like. And those folks around the world where, it's refreshing to hear someone say that, where you're not getting caught up in the rhetoric. And that's what they're trying to determine
Yeah.
as well, like what direction this is going to go into. It's at the end of the day, if it depends on not necessarily the person. I think a split ticket is going to make the difference, and also what policy comes to pass, right?
Mhm.
Because how are taxes going to be treated? How is the tech sector going to be treated? How is the
Mhm.
FTC going to look at mergers and acquisitions? Then you have all the other social issues that are part of policy. And not just social issues, cultural issues. I mean, social issues, in terms of programs such as veteran programs and social security programs and so forth. So I feel like we haven't really heard a lot about that. The only thing we've really discussed is tariffs, but tariffs and corporate taxes and so forth that we've heard from Trump's camp. But it seems to be there's, and then also with the announcement of Vance's running mate, I think the direction that Trump was going relative to how Vance is presenting himself and some ideas might not have been exactly the strategy that Trump wanted to take.
Yeah.
So it's not clear cut yet. And I don't necessarily think the market expected that.
Yeah.
But I do think we're not going to see a Trump 2.0 necessarily. And there just isn't enough time. We haven't heard anything yet from Harris, assuming that she gets the nomination.
We got to wait 1 second as I have the NASDAQ closing bell
Yep.
soundtrack playing on my computer here. So Dash Trader has a feature that you can listen to the closing bell at the NASDAQ. And since the market just closed, that's what we're listening to. You and I have both been there more than a few times. But not only that, we're going back. We're going to be back at the NASDAQ doing DAS closing bell on September 23rd. And we actually have a DAS training immediately before that. So anybody who's interested, if you check out the newsletter, you can find a coupon code to attend the DAS training and attend the closing bell. So that's kind of a perfect cue in to talk about our upcoming training. So let's just jump in. That's passed. The market is now closed. So that brings me to the last topic for today, which is the CrowdStrike, Microsoft IT outage. To me, the market was already rotating out of technology, only because technology was at, kind of all-time highs and was kind of, the earnings per share ratios were, pretty high already. So, it was kind of seemed like we were already rotating out of technology, but then you add a little bit of fuel to that fire, which is this CrowdStrike, Microsoft IT outage. And then of course I always look at things as, okay, what's bad for Microsoft is good for Apple. So you see that Apple had no problem, and there were other computing systems that didn't have any problem at all. It was just the Microsoft cloud, basically. So what are your thoughts overall about, whether or not this was just a rotation out of technology, or is this actually a little bit bigger red flag in technology in a kind of broader sense?
Well, I mean, rotation is normal. You're not going to get stocks that just go up all the time. These are anomalies, right? If you look at these 5, 6, 7 stocks that have had such an incredible run. I mean, Mike, we've been talking about 3 stocks that have multi-trillion-dollar market caps. I mean, these are bigger than GDPs of Western developed nations, right?
Yep.
So you have to think about it in that context, right?
Mm-hmm.
So let's put that out there. We have not had any sort of correction, 5% move up until some of the volatility that we saw this week. This is not to say that these companies are going out of business, or they're just a fad, they're a trend. That's certainly not the case. And you can't expect everything to go from the bottom left of the chart to the top right. I'm pretty
Absolutely.
confident that Microsoft, Apple, NVIDIA, they're going to be around here for the long term, right? I don't know if I'd be that confident in talking about some of the smaller cap, micro cap names, but I'm pretty confident in saying it with this. You know, to your point, here, you know, Apple users unaffected, Linux was another one as well. So I can tell you in the cyber security community, some of the questions that are being asked, you know, in terms of how many vendors should you have? Should you have, you know, multiple vendors for this one particular operating function or so forth? Does it open you up to other vulnerabilities if you were to add more vendors to the tech stack? So that's, you know, in terms of our coverage, that's what we're thinking. And I think that's the bigger question from a higher level. You know, why did this occur? What are other vulnerabilities? How do we make sure that this doesn't happen on, you know, a critical infrastructure or, you know, government platform? So I think that was the initial reaction that came out of it. But, you know, Microsoft had auto alluded to the fact because of obligations that it has in the EU with keeping some of the sources open, that also led to a glitch within the system. So I think there's so much to try and figure out in such a short amount of time. But from my understanding, the glitch that occurred, you know, many people have reverse engineered that, and it was something that wasn't on that level of like mass cybersecurity breach threat. It was, you know, something that went through dev, and it didn't go through the entire procedure, and it went out, and you know, here we are. So
Gotcha. But it does certainly, to allude to what you said earlier, it does reveal how interconnected we are,
yeah.
and how one company or two companies in this case can have an issue, get something to market a little bit too fast, and literally interrupt business worldwide. I mean, because that's pretty much what happened. We had 1/3 of the day out for pretty much all over the world, for anybody who used these products and the Microsoft Cloud specifically.
So, but Mike, again, you have to think, I'm longer term, and I think fundamentally. Now, someone for like you who's a trader who day trades, swing trades, these pockets of volatility are
The
what
opportunity.
you guys do very, very well. And I hate to say it, but when, you know, even during 9/11 or when Hurricane Katrina hit, you think of what the initial reactions are going to be and what's happening in the market. This is what you guys do.
That was
So,
exactly, it was great trading opportunities on
right,
CrowdStrike and
right.
on Microsoft.
Right. And so you know, we're looking at it from two very different perspectives. Now, for this particular audience, are probably going to align well with, okay, here's our opportunities intraday. But for
Mhm.
someone like myself, and if I have Microsoft in my retirement account or CrowdStrike, you know, I'm not going anywhere. Let's put it like that. So I
Yeah.
think we always have to think about what our strategy is, what's our time horizon, and what your style is.
Yeah, absolutely. Great points as always, Jill. Well, listen,
All right.
enjoy yourself in the rest of the
Thank
summer,
you.
and
All
I'll
right.
see you next time. Thank you
All
so
right.
much for your
Sounds good.
analysis. Ciao.
Thanks,
Bye.
guys.
All right. So hopefully you're looking at the chart of the QQQ. I'm just going to stretch this chart out a little bit more. So here we have, this is the NASDAQ right here. And as you can see, I've already marked it up. We have a head and shoulders formation on the NASDAQ. Traditionally, when you have a head and shoulders formation, so here is shoulder one, there's the head, there's a very weak right shoulder, there is the neckline break. You could see the gap down. This was the gap down that kind of led to the kind of, you know, very rapid sell-off. That was on the earnings of Google and Tesla. So here we are. This is Thursday. This is Wednesday. This is Tuesday. That was Monday. So markets had been down. Kind of a flattish day Monday. Tuesday, the earnings come out. Big gap down. Sell off. Big wipeout. And we kind of recover. We rebound a bit. Let's just see the DIA. On the Dow, you could see we recovered, but we had a big volatility here. You know, on the breakout on the this is the DIA, is the Dow 30. Here is the SPY. SPY looks a little bit more bearish. I'd say that this is kind of a, you know, kind of a very bearish pattern as well. So I certainly think that we you know, have a little bit to worry about technically. I do think though that at some point this volatility intraday, I'm just going to show you what the intraday looked like. This intraday, you know, rebound, which was pretty good, We did give it back, but that does usually indicate that some of the breaks are being put on. I'm just going to look at the QQQ again on the intraday. So the breaks have been put on, QQQ, right? Rebound, double bottom, right? So we'll see what happens. I mean, really, Friday is going to be the tell-all. Do we recover tomorrow? Because tomorrow would tell us a lot. We need to kind of close to the upside. That would indicate that the shorts are being covered. But let's look at the two culprits here. So here's Microsoft. Let's take a look at the daily on Microsoft. I mean, Microsoft's bloody. It's a bloody daily, right? I mean, basically, we went all the way from the 470 highs, basically down, all the way to 417. So we've literally lost 1/5 of the value in Microsoft since, it's a tremendous move, on Microsoft. Now let's see Apple, AAPL. So here's Apple. I mean, Apple really, kind of trading with the market, but certainly is still in, what looks to be like an uptrend. CRWD. Look at CrowdStrike. I mean, CrowdStrike went from 400 all the way down to 250. Crazy movement on CrowdStrike. And let's look at Tesla, TSLA. Tesla, which was kind of building a long in the tooth bull pennant on their earnings, completely gapped down. But I mean, Tesla had made an incredible run recently. So this would just pull us back into the weekly buy setup area. But certainly Tesla, taking it on the nose after its earnings report. And let's just take a look at the old man gold. Gold is pulling back as well. So gold kind of made a new high recently. Okay, and now it has subsequently pulled back. And last but not least, let's say we look at gold. Let's take a look at USO oil. Oil pulled back, which is good for inflation. But it is looking like US oil is putting in a higher low, which would mean that maybe that we're going to have some higher oil prices in the near future. So certainly we made a nice move up, pull back, nice move up. But let's watch because oil is a really good indicator as to the price of inflation or how things are going to be dealt with later. So GBTC. Last one but not least is certainly Bitcoin. Bitcoin has been holding up, fairly well as well, kind of a big bull pennant. So that's certainly one to continue to watch. And but I would say that the most important thing to watch is, there's a lot of room down here. Like Jill said, I mean, we're talking about from 500 down to 4. So you got about a 10% correction. So we are right now at correction territory. This would be the area that we would want to see the market kind of find its legs and kind of rebound off of. So this is the 10% correction area as of right now. So certainly keep that in mind that we'd like to see the market. If you're going to stay on the side of the bulls, you need to see the market find its legs at that 10% correction area. All right. So on that note, I'm going to go back to my presentation. All right. We just did our market analysis section. I'm just going to mention this one more time. If you would like to learn more about your Dash Trader software and come and experience the NASDAQ closing bell, on September 23rd, we are going to be doing a special live training class in New York City at the NASDAQ market site. For anybody who would like to attend, we still have a couple of seats left, and we would love to have you join us for the NASDAQ closing bell and an in-person training learning the Dash Trader system. So on that note, if you'd like to stay up to date with all things Dash, sign up at our website, www.dashtrader.com. Subscribe to our YouTube channel, Dash Trader TV, and the Dash Newsroom reminders. Follow us at Dash on LinkedIn, Twitter, Facebook, and Instagram. That's all for now. See you next time. Trade well.